Hello, everyone. It's good to see you. I am finally feeling a little better actually today. Still have a little bit of a sore throat, still sneezing, a little stuffed up, but definitely much better than the previous few days. Actually, our son held up really well. So, out of everybody, I think my wife is still kind of sick, but I think we'll all survive. Thank goodness. So, I don't know. It's kind of scary when you catch something like this out of the blue and it just hits you so hard. And, the media and all the stories you hear, really scares you. And so I'm glad that, we're one of the lucky people that didn't have a lot of bad side effects from COVID, and we were able to recover. So anyway, so I wanted to jump back into, market talk. Obviously, I'm not feeling 100%. And today the market has really, given me a little bit of hope. As far as crypto, we've seen a little bit of a bump, quite consistent. Also tech, a lot of stocks like Shopify, Square, that are involved a little bit in crypto, specifically Block Square, have gone up 8-9%. The close, I think they pulled back a little bit to 8%. These are some pretty serious gains, but we're still far from even price action that we were seeing a week ago. Overall, it's been a downtrend in tech. And as you know, crypto kind of follows tech in this downtrend. The question is if we're seeing a reversal, and I know that's something that we touch on every week. Oh, is things going to reverse? Are we going to start going back up? And I'm looking for that. But price-wise, I'm really not seeing it yet. Oil has fell. The price of oil has fell, I think, the third day in a row. Pretty big, like we're now I think we're $95 for a WTI crude barrel. That's sub 100 already is a big news because we were up, almost 115, 120 per barrel. So that is seeing quite the dip. So obviously you see a lot of stocks like Exxon, Valero have taken the dip. And I've been bouncing back and forth, trading tech and trading oil, trying to really, it wasn't about making money, but minimizing my exposure to tech, minimizing my losses. And from that, actually, it's kind of worked out. I've saved myself about $100,000 extra in losses that I would have taken sticking to tech. Actually made a little money with oil. But I've lost that little bit I've made just because I'm in oil still today. So I've taken kind of that dip. The news we're currently seeing surrounding oil does not give me the confidence to believe that we're seeing a full reversal and oil is going to dip back to prices of even just a month ago. I think this is a little bit of a shake of weak hands, and we're going to see possibly new highs come this week. I'm betting that tomorrow is actually going to be a strong day in oil, and we're going to see a pullback in tech. I don't say this because, this is my feeling or what I wish to happen since I'm still invested in oil, but it's really the trend that we've been seeing in tech, and I still have not seen in crypto and in tech a break to where I see a trend reversal and starting to see things come up. We always see this. It's not a straight line down. It bounces, and an 8 to 10% bounce even is not abnormal for tech and crypto on its way down. So I'm really waiting. I want to see that. If I see Shopify hit $600, that's where I think I would probably start getting in. If I see it go up 3-4 days in a row of green, I'm starting to get hope. But 2 to 3 days, it's just not enough to really make up my mind and dump my oil stocks. If you want to take a little bit less risk in oil, instead of trading straight oil ETFs, you can get into companies like ExxonMobil and Valero and such. Valero is actually a refiner. But nonetheless, these usually take a little bit less of a hit. If you're looking for something even more stable where you can do the old Buffett, the Hershey Bathway, Berkshire Hathaway, that company usually never moves more than 1-2% at a time, up or down. As you know, returns of average about 20% yearly, so it's pretty stable. What do you do with this? Well, if you need some real stability because you don't want to take any more losses, you can bounce into something like that. You can bounce into gold, precious metals, or other commodities like wheat. You can actually even make money until you see that trend reversal in crypto or in tech and you see an entry point. It's very risky. I see a lot of people, they see good days, say crypto goes up 2-3 days, maybe even 4 days in a row. And so you start getting that FOMO. You're like, well, now I'm going to buy. And the moment you buy, it drops. So there's some wisdom in there, buying the dip. People say buying the dip. What it means is even when you see a possible trend reversal, you can wait for a small dip, and that's a good entry point. If you see a trend reversal, and you see trend reversals by setting a price point, okay? Like even Buffett says, you have to buy something at a price that you're comfortable buying. Now, to be honest, with tech, it's down 50%. Any price right now is a price I'm comfortable buying, crypto or tech at. But like I said, it's in a downtrend. So let's stay. And it's frustrating. It's frustrating these times. You try to find things you can make money at. Crypto's down, tech's down. Where you're like, oh, well, maybe go for oil, commodities like wheat. It's just a gamble. And then the news is always telling you doom and gloom, doom and gloom, doom and gloom. Just watch out. Also, these indicators like the Zacks indicator, these other indicators that tell you what's good, what's hot. The problem is that when they tell you a strong buy, right, that gives you about the time that's time to sell. And when something is a strong sell, then that's possibly a time to buy it, because by the time that the rating changes, the trend has already reversed, meaning it's going up. The market's all about staying one step ahead. That's why so many times when something happens, the stock market does the opposite of what you think it was done, because it could be priced in weeks in advance to that event. So it's really difficult. Long-term wins, but these are exceptional times that we're dealing with. So business too. My business, I do e-commerce, has had a tough month. Really down sales 50%. And that creates more frustration, because you're down in your business, you're down in your investments. It's just one after the other. So I don't know, I'm just gonna stay strong, keep doing what I'm doing. Been working these businesses for years now, grinding out. What's funny is a lot of these started so strong. Like when I got one still doing really good, but one business, my goal was to do $1 million a month, and it started out $1 million a month. Now, lucky to do $40,000 a month in revenue, and now it dipped even lower this month. I know between the two, we're still doing over $1 million a year, but you got to understand, like, we're doing $1 million a year in revenue. It's crazy. Always had $300,000-400,000 in the business checking all the time. If I wanted to do some weird promotion, some weird marketing thing, you could just kind of throw money and take risks and say like, well, let's try this promotion, let's do this, let's do that. Now you got to count every penny. You got to really make sure where the ROI is, because you can't afford to try new things from a marketing perspective. It's all about that value that each customer brings and your margins, and you got to be careful. I wish if I had gone back in time, that's what I would have done. I would have been more careful on an accounting side. That's the part that's not fun for me from a business standpoint, is to look at the tiny details and crunch all these numbers to find out churn rate, to find out lifetime value and all this different stuff. But these are very important. I think on broad strokes, I'm like, okay, well, my cost is like 10%, cost me 15% in ads to acquire a customer. These are broad strokes, and I think I'm doing good, and I keep that in mind. And obviously, you do QuickBooks or whatever, but broadly, you know what's going on. But the reality is you really need to crunch, and even a 1 or 2% less on acquisition costs matters, because when you start doing it from the beginning, then long term. But hindsight 2020. What I would do different with the market, of course. I would have sold tech January 1st, and got into oil. There's so many different things that I would have done. And, everybody's like, well, don't beat yourself up. Don't beat yourself up. But if you don't beat yourself up a little bit, you're not going to fucking learn from it, So I try to kind of be hard on myself to learn. And I don't know. I think I'm like, well, what would Jeff do? Jeff Bezos, what would these people do? I don't know what they would do. But it keeps you kind of to a higher standard of competitiveness. You try to be a little bit more creative with the stuff. So, I don't know. Youth is wasted on the young. Now you're old. You try to hack it. You try to do your best. And, the experience you have is worth a lot, definitely. But some things, it's hard to come by. Some opportunities like that, COVID and the acceleration of growth of e-commerce and all that stuff was just once in a lifetime kind of. But then it was once in a lifetime in crypto, and I got in there. So, you think that it's over, but there's always going to be more opportunities. Anyway, this video is getting too long. Thank you guys for tuning in. It's good to be back. Thank you for all the best wishes and get well wishes on the YouTube, and I really appreciate it. And, I hope you guys are glad knowing my family's doing okay. Hope you guys are doing well as well. And let's make some money the rest of the year if we can, all right? Thank you guys, as always. Buy red and sell green.